The financial world had always thrived on secrecy, but nothing prepared anyone for the revelation that came from deep inside Chase Bank. For decades, ordinary investors had speculated about the movements of high-level currency exchanges, wondering who had access to the truly influential financial corridors. Rumors of hidden accounts, unannounced transactions, and elite-only investment windows had circulated in forums and private chat rooms for years. Yet no one had concrete proof until now. An insider, whose identity remained carefully concealed, had leaked information so shocking it sent tremors through both the retail investor community and professional analysts alike. The claim was simple yet extraordinary. VIP currency exchanges had begun quietly, in complete silence, and a significant amount of Iraqi dinar had already been moved among privileged clients. From the outside, nothing appeared unusual. Customers walked into Chase Bank branches, conducted their standard transactions, and left with the impression that the financial world was as normal as ever. Yet, behind closed doors, massive sums were being exchanged at levels ordinary investors could only dream of. The insider described a system carefully designed to avoid triggering public alerts or regulatory scrutiny. Digital wall, it's specifically set up for VIP clients, high-security encrypted channels, and carefully orchestrated transaction schedules meant that no public record hinted at what was happening. Even long-time banking professionals were reportedly unaware of the scale, emphasizing just how tightly controlled the process had become. Word of the leak spread first in whispers. A few specialized financial blogs posted cryptic messages, hinting at movements of the Iraqi dinar that would not appear in public reports. Small investor communities began piecing together clues, connecting forum discussions, unofficial screenshots, and anecdotal evidence of unusual bank activity. As the news circulated, curiosity turned into anticipation. Investors who had been holding dinar for years began reevaluating their positions. Those who had previously dismissed the currency as speculative suddenly felt a sense of urgency. The leak suggested a rare opportunity was unfolding, but only a select few had a front-row seat. Analysts were scrambling to interpret the implications. If VIP exchanges were truly underway, what did this mean for the broader market? Some suggested that this was a calculated move, allowing institutional players to adjust before public announcements. Others speculated that the exchanges were part of a larger geopolitical strategy, potentially influenced by shifting economic policies in the Middle East. Every angle seemed plausible because the insider's leak offered tantalizing but incomplete information. Screenshots of internal memos, encrypted chat logs, and transaction summaries provided enough detail to convince the financial community that something significant was happening, but not enough to provide a full roadmap. The insider described scenes that sounded like they were pulled from a thriller. Elite clients were reportedly guided through private digital banking portals where every movement of their assets was carefully tracked and timed to avoid detection. Instructions were precise: when to convert funds, how to structure transactions, and even subtle timing cues designed to exploit momentary market inefficiencies. The process appeared meticulous, almost surgical, with the goal of maximizing advantage while keeping the operations invisible. Ordinary investors, unaware of the ongoing activities, remained on the sidelines, their window of opportunity closing quietly with each passing day. Social media began reacting in real time. Financial influencers, small-scale traders, and curious onlookers flooded platforms with theories, interpretations, and warnings. Some accused the bank of insider trading and unfair advantages, while others speculated that the leak itself might be orchestrated to manipulate sentiment. Screenshots from forums circulated widely, showing discussions about unusual patterns in dinar exchanges, sudden changes in liquidity, and odd anomalies in trading volumes. Even amateur investors, armed with little more than speculation and observation, felt drawn into the narrative. The sense of exclusivity, of being left out of a massive, silent financial movement, heightened anxiety and excitement simultaneously. The Iraqi dinar, long considered a speculative asset, suddenly became the center of global attention. Its value, while stable compared to some emerging currencies, was now tied to whispers of clandestine exchanges among elite investors. For years, dinar enthusiasts had hoped for an opportunity to realize significant gains. Some had held the currency for decades, trusting in a future surge that never seemed to materialize. Now, the insider leak suggested that a surge might already be quietly underway, accessible only to those with privileged connections. The implications were staggering. The dinar might rise in value dramatically once the public became aware, rewarding those who acted early while leaving ordinary investors scrambling. Even mainstream financial media began to catch wind of the story, though cautiously. Reports emerged about unusual banking activity, but without confirmation, they remained speculative. Analysts hedged their statements, emphasizing that no public filings or official announcements had been made. Yet, the very secrecy of the situation added fuel to the fire. Investors were drawn not just by potential profits, but by the thrill of uncovering hidden truths. Every leak, every screenshot, every whispered hint became a piece of a complex puzzle, and the more fragmented the information, the more compelling the narrative grew. For the insider, the risk of exposure was real. Sharing confidential information from one of the world's largest banks could lead to severe consequences, yet the decision to leak had been made. Whether motivated by conscience, frustration, or personal gain, the act had irrevocably shifted the financial landscape. Traders, analysts, and casual investors alike were now forced to consider the existence of a parallel, invisible economy operating just beyond the reach of public scrutiny. It was a reminder that in the world of high finance, what the public sees is rarely the full story. By the end of the first week after the leak, discussions had erupted across every platform. Small investors debated strategies, trying to discern patterns from limited information. Forums became arenas of speculation, with members sharing potential leads and attempting to confirm rumors through unofficial channels. The dinar, once a background currency in global finance, had now captured the imagination of thousands, if not millions, of investors worldwide. The IGNITEDAFSFRIEN PNDUS involved Alak felt its gravitational pull. Yet amidst the excitement, uncertainty lingered. No one could say for sure how long the VIP exchanges would continue in secret, how large their impact would be, or what consequences might follow when the movements inevitably became public knowledge. The leak had opened a door to opportunity, but it also revealed a world where information was power, and only those with access could truly capitalize. As ordinary investors watched from the sidelines, the lesson became clear. In a financial system governed as much by secrecy as by strategy, knowledge itself was the ultimate currency. As news of the insider leak from Chase Bank spread, social media erupted with a mix of excitement, disbelief, and frantic speculation. Forums dedicated to currency, trading, and investment strategies suddenly became hubs of activity, their members piecing together scraps of information into theories and predictions. Some investors had stumbled upon unusual patterns in transaction histories, while others claimed to have received whispered confirmations from anonymous sources. Screenshots of supposedly private internal memos circulated widely, showing references to VIP currency exchanges that had never appeared in public records. Every post, comment, and shared image added layers to a complex puzzle, making it impossible to ignore that something significant was unfolding behind the scenes. The buzz wasn't limited to online communities. Independent financial analysts, who often relied on publicly available data, found themselves struggling to make sense of sudden anomalies. Small fluctuations in the value of the Iraqi dinar, previously dismissed as routine, were now scrutinized with intense curiosity. Traders pored over charts, looking for signs of large, coordinated movements. They noticed unusual volumes being reported in certain markets, patterns that didn't align with typical trading behavior. The silent VIP exchanges seemed to leave only subtle footprints, but those who looked closely could detect them. The challenge became one of interpretation: how much of this was real and how much was amplified by fear, hope, or rumor. Private chat groups, encrypted messaging apps, and niche forums became the primary source of breaking information. Investors shared everything from supposed insider tips to anecdotal evidence of sudden account changes. Some claimed that certain clients had been invited to special banking portals, where transactions were executed in secrecy, bypassing the usual verification processes. Others suggested that government oversight was in play, with agencies quietly monitoring the exchanges to ensure stability while allowing VIP clients to act first. Each piece of information, whether verified or not, heightened the sense of urgency and exclusivity. Ordinary investors who had been waiting for years for a chance to benefit from a potential surge in the dinar now faced a dilemma: wait for public confirmation or try to act on incomplete knowledge. The notion that this entire operation had begun in silence only intensified the intrigue. The leak suggested a level of planning and coordination that went far beyond ordinary market speculation. Select clients had clearly been given access to opportunities that the broader public would only learn about later, if at all. Screenshots and chat logs indicated that even small errors in timing could significantly affect outcomes, showing how meticulously the process had been orchestrated. In many ways, the leak acted as both a warning and an invitation. Those who could decipher the signals might profit, while those who ignored them risked being left behind entirely. Analysts debated the potential motivations behind the bank's actions. Some speculated that this was part of a broader strategy to strengthen liquidity in certain markets before making a public announcement. Others argued that it could be tied to geopolitical considerations, with elite investors acting in anticipation of changes to policy or currency valuation in Iraq. The uncertainty surrounding these motivations created a tense atmosphere. Every theory had its advocates and detractors, and no one could claim definitive knowledge. Yet the very ambiguity drove engagement, as investors tried to fill in the gaps with their own research, experience, and intuition. The impact on the dinar itself was already becoming noticeable. Though small scale in public perception, the secret VIP exchanges were exerting subtle pressure on trading volumes and currency valuation. Long-term holders watched closely, comparing historical patterns with recent anomalies and trying to determine if this could signal a larger trend. Many speculated that when the exchanges eventually became visible, the dinar's value could spike dramatically, rewarding those who had early access. The idea that the currency had been quietly accumulating strength without public awareness fascinated both seasoned traders and newcomers alike. Meanwhile, ordinary investors began forming communities to share strategies and tips, often referencing the leak as a central point of discussion. They debated whether to risk acting on unverified information or whether to wait for confirmation that might never come in a timely manner. Some shared instructions on how to track subtle movements in exchange rates, while others exchanged ideas on timing purchases to coincide with market anomalies. The urgency was palpable. Everyone was aware that in a world where insider knowledge could define profit and loss, hesitation could mean missing an unprecedented opportunity. The narrative of secrecy and exclusivity continued to captivate public attention. The very idea that VIP clients were operating in a parallel financial universe, quietly leveraging information inaccessible to most, created a sense of drama and tension. It became more than just a financial story. It was a story about inequality, strategy, and the invisible forces that shaped global markets. Each new leak, whether small or substantial, only added fuel to the fire, making ordinary investors feel both anxious and intrigued. The emotional component, the fear of missing out, began to dominate discussions, sometimes overshadowing analytical considerations. Some of the leaked information pointed to incredibly sophisticated mechanisms for moving currency without drawing attention. The insider described the use of staggered transaction times, hidden digital wallets, and cross-border transfers designed to minimize risk. Each movement appeared calculated, as if executed according to a precise blueprint that only VIP clients could access. Even small mistakes could be costly, emphasizing how careful and deliberate the process had been. For ordinary investors, the lesson was clear. This was not a casual opportunity, but a carefully curated operation for a select few. The story soon reached mainstream media, though cautiously. News outlets covered it with hedged language, acknowledging reports of unusual bank activity and insider claims without confirming specifics. Headlines hinted at secretive currency exchanges and potential dinar gains, but the details remained vague. For those following the story closely, the media coverage felt both validating and frustrating. It confirmed that something significant was happening, yet it revealed nothing actionable. The gap between speculation and verified information became a central theme, shaping the strategies and anxieties of investors across the globe. By the end of the week, the sense of anticipation had reached a fever pitch. Forums were filled with theories about who had access to the VIP exchanges, what the short-term effects on the dinar would be, and when public awareness might finally catch up. Some investors prepared their portfolios in anticipation of a spike, while others waited nervously, unsure whether to trust the leaks. The insiders' revelations had fundamentally changed the landscape. What was once an abstract rumor had now become a tangible factor influencing decisions, strategies, and expectations across both small-scale and professional trading communities. The story of these quiet VIP exchanges became more than just financial news. It became a symbol of a hidden world, operating in parallel to the public market, where knowledge equaled power. Investors were reminded that in the complex, interconnected world of currency trading, timing and access could determine success or failure. As ordinary traders continued to analyze every available clue, the realization grew that those who had received early access were operating under rules invisible to the rest. In this unfolding drama, the insider leak had set the stage for a new chapter in the life of the Iraqi dinar, one that would be watched closely by millions, yet fully understood by only a select few. By the time the third week after the leak arrived, the financial world was fully ablaze with speculation, anticipation, and a subtle sense of fear. The initial shock of the Chase Bank insider revelation had evolved into a complex narrative that dominated investor discussions everywhere. Ordinary traders, long accustomed to waiting for public signals, found themselves grappling with an entirely new reality, a silent, parallel market where VIP clients moved massive sums of Iraqi dinar under the radar. What had begun as whispers on forums and encrypted chats had grown into a frenzy of analysis, predictions, and urgent questions about timing, strategy, and opportunity. The leak had shifted the very landscape of currency trading, exposing vulnerabilities and advantages that few had previously imagined. For the VIP clients who were the focus of the leak, life had grown exponentially more complex. They navigated private banking portals designed with sophisticated encryption, carefully monitoring each transaction and planning subsequent moves. Every decision was critical, with minute differences in timing potentially producing enormous variations in outcome. The insider had described this ecosystem as almost like a game of chess, where each move was calculated in advance, and even a single misstep could be costly. Those in the know acted with a precision and confidence that contrasted sharply with the uncertainty and speculation that now consumed the majority of the investing public. Meanwhile, ordinary investors continued to monitor every possible clue. Currency charts, bank notices, forum discussions, and even rumors became part of a frantic search for insight. Screenshots of supposed VIP communications circulated widely, though their authenticity was impossible to verify. Analysts and hobbyist traders alike attempted to reconstruct patterns, hoping to infer timing, scale, or the potential trajectory of the dinar. Each subtle market movement was scrutinized for hidden significance, feeding an ever-growing sense of urgency. The fear of missing out was palpable. Those who had acted early seemed to hold the keys to potential financial windfalls, while everyone else wondered if the window of opportunity had already closed. The dinar itself became more than just a currency. It became a symbol of an invisible power dynamic. Its valuation, previously influenced by conventional economic indicators, now seemed tied to the quiet maneuvers of those with insider access. Investors debated whether the movements represented a precursor to a larger surge or merely a controlled experiment among elite clients. The complexity of the situation made predictions difficult, but that uncertainty only heightened engagement. Each investor, each analyst, each casual observer felt the magnetic pull of potential gains, weighed against the uncertainty of an opaque system where knowledge was power. Public attention, though delayed, began to mount. Media outlets reported cautiously, often relying on the same leaks circulating in forums and chat groups. Headlines suggested secretive currency exchanges, privileged access, and hints of potential dinar appreciation. While these reports lacked concrete confirmation, they confirmed a reality that insiders and small investor communities already understood. Something significant was happening behind closed doors. For many, this validation was a double-edged sword. On one hand, it confirmed suspicions. On the other, it increased anxiety as public awareness could trigger broader market reactions that might reduce the advantage of early movers. Small-scale investors were not idle. Communities formed to strategize and share potential moves, trying to emulate the tactics of VIP clients without access to the same privileged information. Some attempted to track subtle indicators in trading platforms, while others experimented with timing purchases to coincide with minor fluctuations that might reflect hidden activity. The challenge was immense. Without direct access to insider systems, they were effectively racing to anticipate moves that were deliberately concealed. Yet the stakes were high, and the allure of potential gains made the risk feel worth taking. Fear and hope intertwined, driving a wave of activity that made forums and social media platforms nearly unrecognizable from their typical state. The insider leak had also triggered a philosophical debate among investors. Some argued that the existence of VIP-only exchanges was fundamentally unfair, a manipulation of market forces designed to benefit the few at the expense of the many. Others viewed it as simply the way modern finance operated. Information asymmetry had always existed, and those who could access early insights naturally gained advantage. This debate fueled discussions far beyond the mechanics of currency trading, touching on ethics, transparency, and the role of regulation in global finance. In the background of these discussions, the Iraqi dinar remained at the center, a tangible indicator of opportunity and risk alike. As the third week unfolded, reports of unusual market behavior grew more frequent. Small, seemingly isolated movements in dinar trading were interpreted as signals of underlying VIP activity. Even minor changes in liquidity were examined for clues, as investors attempted to engineer the strategies of those operating in secrecy. This period of observation and speculation felt almost like a waiting game, where every second mattered and every small detail could carry enormous significance. Patience and timing were critical, and the narrative of quiet advantage drove a sense of urgency unlike anything previously experienced in conventional trading cycles. The consequences of the leak extended beyond financial markets. It affected investor psychology, shaping behavior, decisions, and emotional responses in a way few prior events had. Those with partial information often overestimated their understanding, while others underestimated the depth and sophistication of VIP operations. Rumors of government oversight, monitoring, and potential intervention added another layer of complexity. Every investor had to weigh the possibility that actions taken based on incomplete information could result in unexpected outcomes, while the privileged few executed their moves with calculated precision. The contrast between the worlds of ordinary traders and VIP clients became increasingly stark, highlighting the hidden dynamics of influence in high finance. By the end of the third week, the leak had transformed the perception of currency trading. The Iraqi dinar, once considered niche and speculative, was now central to a story of secrecy, strategy, and potential wealth accumulation. Forums and social media were filled with analyses, predictions, and warnings, while small investors anxiously prepared for the next phase. The insiders' revelations had created a ripple effect that extended far beyond the initial leak. Trust in traditional channels was shaken, attention was redirected to unconventional signals, and the concept of a silent market became a reality. Yet despite the frenzy, a sense of anticipation lingered. The VIP exchanges continued, hidden from the public eye, their timing and scale carefully managed. Ordinary investors, for all their analysis and speculation, could only watch and prepare, hoping to glean insight from scattered clues. The story of the Chase Bank leak was no longer just a report. It had become an evolving drama where every new piece of information could shift strategies, fortunes, and perceptions. The silent exchanges had set the stage for a transformative period in the life of the Iraqi dinar, one that promised reward for some, uncertainty for others, and intrigue for all who dared to follow it closely. In the final analysis, the leak had changed the rules of engagement. Information had become the ultimate currency, secrecy the most valuable asset, and timing the key to success. Those who had access thrived in a quiet but profound advantage, while the rest of the investing public learned a powerful lesson in finance. Knowledge isn't just power. It is the difference between opportunity and missed potential. The world watched, waited, and speculated, knowing that the ripple effects of these silent VIP exchanges would be felt long after the initial leak, shaping perceptions, markets, and strategies in ways few could yet predict.